Hello traders and welcome in a new weekly analysis webinar. This is Mohamed Yaoud and I'm the Chief Markets Analyst at PU Prime. And today is the 25th of November 2024, the beginning of a new trading week. And basically it seems to be that we will be having a lot of volatility in the markets because we are already just starting the week and we are already seeing some big moves in some specific assets or on some specific assets like the US dollar, gold, as well as the US indices. So I really hope it will be a useful session for everyone, and I really hope that it will be a green week in your accounts and in your profits. So let me have a look quickly by starting on the economic agenda for this week. Hello everyone, and thank you for tuning in with me. Just to make sure that we are all right, can you just please confirm if the voice is okay? The video and the audio and everything is fine. Just write me down in the comments section. Fine here. Okay, all good. Let's start by having a look on the economic agenda. And before talking about the economic agenda, remember when we said during the last week that I personally expect that the previous week will be a risk-off sentiment. And we explained the risk-off when we said that markets are either on a risk-off or a risk-on sentiment. And we explained even the risk-off sentiment by saying that, okay, when the risk is off, investors basically favor the safe haven assets more than the risky assets. And that's why we have seen successfully during the previous week that gold was basically reaching just higher. We reached the high of around 27.20 by the beginning of today, as well as some other instruments. So during the last week, we expected a risk off, and it played out really well. Do I still see a risk off during this week or not? To be honest, so far, by the beginning of today, I can see no, it's a definite risk on sentiment, because what happened was during the last week, we had so much escalation in the Russian war against Ukraine. It's not only, like Russia against Ukraine, it's somehow Russia and North Korea against Ukraine and its allies like the United States and the NATO. So this is the escalation that we have seen during the last week, and that's why we were just buying gold. We were just seeing a risk-off sentiment in the markets, and the VIX, or the volatility index, was just going higher and higher. However, during the weekend and since Friday, we have seen no any escalation further, or no any further escalation by the parties involved, like Russia or Ukraine. I don't mean things are resolved. However, the absence of any escalation during the last 48 hours might have been a good reason for markets to see some retracements. So currently, when we are seeing the gold chart, I can see it here in front of me, we are trading around the 26.69, down from the 27.25 roughly. So a downward move on gold. It doesn't really mean that we are changing direction, and we will see exactly the main trend on the gold when we talk technical analysis. But I mean, the absence of escalation doesn't really mean a de-escalation in the process, but it just means that markets can take a breather, because nothing just goes on higher without any retracements, and nothing just goes down lower without any higher retracements. So this is how markets are. So at the moment, yes, I can see a risk on mood back again. I can see indices moving higher. If we're talking about the Dow Jones, the Nasdaq, S&P, even the European stocks, FTSE is up, the DAX is up. Almost everything in the markets at the moment when it comes to the stock markets, even the Asian markets, New Zealand, Australian, everything is just higher. On indices, the VIX index, which is the fear index, is lower, almost around 10%. So this is how you get a general feeling of the market. So the VIX, the fear index, is down. Indices are higher. Indices, as we all know, they are regarded as the risky assets. So, and as well as gold is also trading lower. So yeah, it doesn't really mean that I do expect the risk on sentiment to continue during this week because yeah, we haven't seen any escalation during the last 48 hours, but it doesn't really mean that we will continue the week with no escalation because, believe it or not, the war is still there. So yeah, maybe during the week we will find some further escalation. Maybe this risk on sentiment wouldn't really continue during the whole week. However, this means something. This means that we will trade this week using technical analysis and using the stop loss because it shouldn't really mean that you are wrong if you get your stop loss hit. It just means that the market dynamics are changing really quickly at the moment. So if gold right now is moving lower, if you short and it just flies higher again, it doesn't really mean that your analysis was wrong. It means that, okay, maybe there is further escalation somewhere in the world. So you should make sure that during this week, yeah, we will trade according to technical analysis, but because things might change anytime, literally anytime, you must make sure that you have your stop loss there because the war will eventually end. But believe me, it will take much, much longer for things to settle down before your account goes through the margin call. So I hope that you do understand what I'm trying to say here. Okay, and let's start by having a look on the agenda real quick. Yeah, so the US markets will be closed on Thursday and Friday anyway. On Monday today, what do we have? Absolutely nothing of interest. We do have a speech by the ECB's Lane and the business climate from the German economy. I wouldn't really say that it would affect so much on the market. So yeah, during today, nothing of interest to look for on the economic agenda. And basically, this is how Mondays start, or the week always starts with a Mondays and Fridays are always the lightest days when it comes to the economic agenda. On Tuesday, tomorrow, we do have the CPI from the Bank of Japan, and it's important. It's really important. Even if you don't really trade on the Japanese yen, and you should because it offers brilliant opportunities, the CPI from the Japanese economy definitely means that somehow we will be learning something about the monetary policy in the Bank of Japan. It will affect the Japanese yen and it will also affect the dollar. Remember what happened back in August of this year when we had this unwinding of the carry trade and how it seriously affected currencies, not only currencies, but the effect was also on the stock markets when we had those crashes back in August. All of this was due to the carry trade unwinding, and it affected the dollar yen and the indices so much. So the monetary policy, so far the Bank of Japan is saying, okay, we are not really going to raise interest rates unless we make sure that we should raise interest rates. So the CPI, or the Consumer Price Index, will definitely give some insights onto whether they should or not yet. So this is something I would personally be present for, and expectations are to go higher a little bit from 1.7% to a 1.8%. We do have, again, speeches by the Monetary Policy Committee in the Bank of England, the member pill, and we have McCowell speaking as well from the ECB. Building permits, that's important. Housing price index, yeah, let's say some housing indicators from the US economy. I wouldn't really pay so much attention to it at the moment, not because they are not important, but because we have more important things to be focusing on. So I mean, currently, at the end, I'm a technical analyst, but I'm also an economic analyst, okay? I trade economics and I trade fundamentals so much. The world has many things to look for. However, it's always a concept of priority. So at the moment, I wouldn't really leave reading news and updates about the geopolitical tensions either between Russia and Ukraine or in the Middle East between Iran, Lebanon, Israel, and Gaza, and what's going on in there, just to see the housing indicators in the US market. So they are important, but what I want to say is at the moment, we have more important stuff that markets will be affected with. This is my whole point. So we also have the CB consumer confidence for November, expected to slightly edge higher from 1.8 to 108, to 112 points. Again, we have some new home sales figures for October. And the FOMC meeting minutes. Yeah, let's say that's the most important thing I see so far on the economic agenda for this week. This is the FOMC meeting minutes, and it will be released on the 26th of November. And just for you to know, because I still get a lot of questions by new traders or people who don't really care enough to read, they see FOMC meeting, they disregard the word minutes and they just say, okay, we are having a FOMC meeting this week. It happens quite a lot. Even from my friends or even from people I know who actually trade the market, they always call me and they say, okay, what do you expect for today's FOMC meeting? And what meeting are you talking about? And when I check the economic agenda, I definitely realized that they mean the meeting minutes. The meeting minutes are basically meeting minutes. They release what exactly happened during the last meeting today. So it's always 3 weeks after the meeting itself. So 3 weeks from Tuesday, 26th of November, we had a meeting for the FOMC, and it's time now to release the meeting minutes, because after 3 weeks we will have another meeting by the FOMC, after which we will have the meeting minutes after another 3 weeks, and so on and so forth. So it doesn't really mean that this is a new meeting. This is just that they release what happened during the previous FOMC meeting, and it sometimes offers some insights into what might happen in the future. Okay, moving forward to Wednesday, we do have the Reserve Bank of New Zealand interest rate decision, and it's basically expected to move lower a little bit from 4.75% to a 4.25%. So cutting interest rates by 50 basis points is what we expect during this meeting. And we, of course, will be having the press conference as well from the Reserve Bank of New Zealand. So this is something that we definitely should look for. We have the durable goods and the core durable goods orders. We have the PCE prices. Wait a minute. Yeah, we have the PCE. Usually the core PCE price is announced one day before the PCE index itself. But because Thursday and Friday is a weekend, or a holiday, I mean, in the United States, so actually it will be announced on Wednesday. So yeah, another thing that's really important. This is basically more important than the FOMC meetings or the meeting minutes. So we have the core PCE price index, the core PCE prices, And we have, what is the PCE? Do you follow me? The PCE is basically the personal consumption expenditures. So it's an alternative to the CPI, which is the Consumer Price Index. So basically inflation, as a general term, is when prices go higher by time. Okay, this is inflation. How do we measure inflation? It differs according to the indicator itself. So some people will just look at the CPI. The Federal Reserve has another way to measure inflation, and that's by looking at the personal consumer expenditures. So it's basically, or the personal consumption expenditures, it's basically another way to calculate how prices are moving higher or lower, and it's a little bit more accurate than the CPI as per the Federal Reserve opinion. So this is basically more important than the CPI. Markets don't really react to the PCE so much like they react to the CPI, but it's still really, really important. PCE price index for the month of October. Where is it for the yearly over year basis? Wait a minute. Yeah, here we go. The core PCE price index year over year for October. The previous one was basically 2.7. And so far, we don't have any expectations for it. And we have the PCE price index as well. Not the core, but the headline PCE price index, again, year over year. And still, we don't have any expectations for it. So you can just follow the economic agenda on investing.com, and maybe today, tomorrow, they will release the expectations, which is usually from Reuters economists onto here. And we will see how this will affect markets on Wednesday, the 27th of November. So on Tuesday, we have the FOMC meeting minutes, and on Wednesday, we have the PCE price index. Yeah, the FOMC meeting minutes are written down here on Tuesday and on Wednesday again. I think Tuesday here is a mistake. It should be on Wednesday because it's released only once. Why is that low reaction to the PCE compares to the CPI? I mean, simply because markets don't really know that the Federal Reserve favors the PCE more than the CPI. It's just, you know, the newbie traders and everyone just trying to understand the economic and the fundamental analysis by just reading the headlines. They will always say to each other, okay, today is the inflation. What is that? It's the CPI. Wait, if you do understand a little bit more about the Federal Reserve, if you actually listen to Jerome Powell's comments in the press conference after the meeting, you will know that the Federal Reserve favors the PCE more than the CPI. So this should have the higher reaction, but they don't actually, this is not the case. This is not what happens. Even in the quarterly expectations, economic expectations that's released by the Federal Reserve in their meetings, they issue their expectations on the PCE, not the CPI. Which means that, okay, they look at the CPI, but the PCE is much, much more important. Not everyone in the markets just know that. And that's why it doesn't really have, you know, a higher reaction or volatility compared to the CPI. Moving on to Thursday, that's when the week somehow ends. It's the Thanksgiving Day in the United States. A little bit of CPIs from the German economy. Another speech by Lane, and that would be it for Thursday. Again, on Friday, it's an early close in the United States session, so I don't really believe that we will be having any fireworks on Friday, except for the preliminary CPI figures by the Eurozone, expected to slightly edge lower for the core CPI, and not slightly higher, it's much higher, from 2% to 2.3% for the month of November. So yeah, to summarize this week, we have the FOMC meeting minutes, we have the US PCE, or the personal consumption expenditures. We have two holidays, or two holidays in the United States, which is Thursday and Friday, and we have the Euro CPI. That's what I see on the economic agenda for the whole week. Other than that, it's just, nothing important to look at. Okay, I think it's time for technical analysis, and today will be a long technical analysis session because, as you can see, it's quite challenging. We have gaps, many gaps by the beginning of the trading week, and whenever we have gaps, the question is, will we trade to fill those gaps first before continuing the trend, or we will just neglect those gaps? This is a question that we will be answering right now. Just a moment. Okay, let's start with gold. And today, by the way, I'm not so into cryptocurrencies, but I must look at the Bitcoin today because what's happening on Bitcoin is just crazy. Let's have a look on gold and start with having a look on the monthly chart. Why is it? Because today is the 25th. So this week is the last week of the month, right? So this candle will close, which is the monthly candle, this bearish one will close during this week. So it's really important to know where do we stand on the monthly time frame. And as you can see, pretty simple. We have a lower low and a lower high and a lower low here, as you can see on the monthly chart. So I don't really expect it. There is no way. It would be really hard for this monthly candle to flip and end the week or the month bullish. So I'm basically bearish on the monthly time frame. So yeah, when it comes to the weekly candle, it's quite challenging because we were moving higher, lower in this manner. That was the last low in this upward trend. We broke below, however, we are still trading again like this. So the previous week was definitely a support around the 25.60, let's say 25.60. However, we do have resistance close enough around here, which is the 27.40, let's say. So that's the range that we are talking around at the moment, 25.60 and 27.40. The weekly candle or the weekly time frame doesn't really give me a bias so far, right? However, on the daily time frame, we have 1, 2, 3, 4, 5 during the previous week. We found some sort of resistance around here, right? It was previously support, broke below, became resistance. We are back again, testing those highs. Yeah, this is what I mean here. Let me just refine those levels. That's a definite level of resistance here. Definitely the bearish move or the reaction from here is very powerful. So it would be less probable that we see this huge bearish reaction only to continue higher. I think we will be diving a little bit more lower as long as the risk on sentiment continues. So far I'm more bearish on gold than bullish. So yeah, let's sum up this analysis on gold and say that, okay, we went much lower. We broke the previous point of reversal because the upward trend was moving in this manner. So that was the last low. By breaking below the 26.92, basically this upward trend ended. Okay, currently we are trading near some support, even if it's some minor support. Is it? It's an old level, right? A little bit around here. So we came back, we tested those support levels, we were trying to move higher. So basically, I do expect that gold during the day will just retrace a little bit and then continue moving lower. Okay. Yeah, this is how I see it. This powerful reaction lower is something that, yeah, we must continue a little bit, because it would be hard for me to see a higher move after this very sharp reaction. So yeah, from here, I do expect a move higher, maybe to the levels of 26.90. And let's see Fibonacci here. Let's see Fibonacci retracements to know our possible levels of retracement. So if you know, or if you realize here, the levels of 50% retracement is exactly the same level of the previous support. So it might be some levels of resistance here, which is the 50%. Let me remove the 38.2. So yeah, the levels of 26.90 roughly is something I would target first for this retracement. And in case we have some bearish reaction here, we will be shorting gold again back to the levels of 26.50 or 26.60, and then much lower. This scenario or this analysis will play out if and only if we don't have any escalation in the geopolitical tensions. If we do have any further escalations, we will just break higher and continue the move. But personally, I like to trade technicals. Okay, so this is how I'll be playing with gold during this week. And again, let me tell you that the stop loss, they always say the trend is your friend, right? No, it's not really your friend, because it reverses, it can give you false signals, so on. What I really believe is your friend in the markets is definitely your stop loss. It will never betray you. So yeah, it's only there to keep your account safe. Having a look on the US indices here, I don't like what I see. Absolutely no. When it comes to the monthly chart, it's just a bull candle. It's more than 6% or 6.5% gain during this month. So most probably we will have some retracement. Why? Because yeah, a monthly candle can close like this, but most probably like 90% of the candles will always have higher and lower wicks, right? It's really the rare scenario to find a candle like this with no higher wick, or like this. You must have some sort of a higher wick. So far we don't have any higher wicks on the monthly chart. So yeah, I believe that this week might be a bearish retracement, maybe, on the Dow Jones and the indices. Let me see if this makes any sense. No, I don't really like what I see, so yeah. Look at how long the Dow Jones has been moving higher with bearish momentum. Just because we don't have any previous resistance levels. And let me see the target for this upward move. We just exceeded 78.60. We're off to the 100%. So yeah, generally it's 100% bullish. What I mean is the indices will continue moving higher Let me see the target for this wave. 44,670. Might be some resistances here, however, we'll continue moving lower. Okay, let me tell you, plain and simple. Any downward retracements on the Dow Jones or the Nasdaq or the S&P is something that you will short, okay? No, sorry, I take this again. Any retracements lower, you will finish, or you will wait for the retracement to end before buying. I mean, it's just like an upward trend. So whenever you have a retracement, wait for it and buy and so on. So keep buying this Dow Jones. I don't really like what I see at the moment because the gap higher closed above the all-time high. Momentum is there. We do have supporting momentum, but it would be really risky to buy from here, right? It would be risky. So what I would personally wait for, and look what's happening after the gap higher. We gapped higher, however, we have been doing nothing for a couple of hours, maybe 7 hours, 8 hours. So there is no momentum at all. So personally, I would wait for the gap to be filled on the Dow Jones, a move lower, a retracement, a healthy retracement, nothing wrong with that. And I'll buy the Dow Jones. Trading on your market here compared to trading on Binance, what's the difference, please? And what do you advise? Just a moment, please. Okay, for the Dow Jones, as I'm saying, I'm expecting a move lower to fill in the gap before moving higher. Yeah, there was a question, trading on your market here compared to trading on Binance. What's the difference, please? On Binance is basically cryptocurrencies, but on this platform or on MetaTrader 4 or 5 or trading with PU Prime, you don't only have access to cryptocurrencies, but you have access to currencies, cryptos, indices, stocks, everything. So yeah, on the Nasdaq is pretty much the same. I do expect to fill the gap around here, 20,780. Again, after seeing some bullish price action, I'll be buying into this. Let's have a look on Bitcoin, because yeah, why not? On the monthly chart, you can see pretty simple technical analysis. Believe me, if I gave this chart to someone who just finished the basic technical analysis course, he will tell me, okay, that's a move higher, that's the flag. So when we broke higher, the target was definitely something like this. No, I'm sorry, it should be from here. Yeah, because we took the whole pole of the flag, right? The break higher means that we will continue the move higher. So we are almost near the target of this pattern, right? I want to look at the algorithmic chart. Wait a minute. 10, 20, 30, 40, 50, 60, 70, 20. Why is it not showing? Oh, I'm sorry. Yeah, there is the algorithmic chart or the logarithmic chart. And I want to see the target based on Fibonacci. Yeah, that's the question I'm trying to answer right now, by the way. Do you think Bitcoin will extend beyond 100K or will drop? No, I don't really think it will extend beyond 100K. No, I don't see it. 100K is a resistance level. Psychological resistance, very, very important. However, by the way, it doesn't really mean that once we touch the 100,000, we will just move lower, because basically there is something that we call as the overshoot or the undershoot. If there is a critical level in markets that all market participants are waiting for, like the 100,000 on the Bitcoin, markets will do one of two things. Either prices will move very close to the 100,000, but we will not touch it and reverse. This is the undershoot, right? So let's say we haven't really touched the 100,000 so far. We were just like $420 away. If prices reversed from here directly, it's a definite undershoot. Why does this happen? Because market participants are waiting for the 100,000, right? Some will say, okay, instead of waiting for 100,000, people who actually bought earlier, they will say, instead of waiting for 100,000 to take my profits, I'm happy to take it out at maybe 99,000. Others who want to short at 100,000 will say, okay, maybe we will not touch the 100,000 directly, or I don't want to miss the move, so they will start shorting a little bit below the 100,000. So there will be some sort of market activity, supply and demand shifts just below those 100,000 levels, and this is when an undershoot happens. The overshoot will happen if prices reach a very important psychological level and doesn't just reverse immediately. We might go a little bit higher. And in this case, I'm not sure if this is a little bit too advanced or not, but I'll explain it for you. Why is my target here around 102,820? And what does this mean? In this case, I'll tell you something, and you'll have to concentrate on that one because it's really important. Bitcoin used to be for $1, right? If Bitcoin moved higher from $1 to $2, that's a 100% move. But in order for Bitcoin to move from $2 to $3, it's no longer a 100% move. It's a 50% increase. Because as the price of any asset becomes higher and higher, yeah, it's still moving. Okay, so let's say this last move, we went higher from 60,000, let's say. We are almost 100,000. So yeah, we are up $40,000 on the Bitcoin. However, 40,000 out of 60,000. It didn't even double yet. It isn't really the same here when it went higher from 25,000 to a 50,000. So the move previously was higher in terms of percentage. Why? Because we moved from 25,000 to a 50,000. Now, we didn't even double yet in this higher move or this last recent move. So what I want to say is, when prices of a certain asset becomes so big, don't just focus on the moves in terms of value, but you will have to focus on the moves in terms of percentage. So in this case, you don't look at the arithmetic chart. This is the arithmetic chart. You will see that the distance between 20,000 to 30,000, which is $10,000, is exactly the same from 30 to 40 and from 40 to 50, because it's in monetary value, right? In this case, we don't want this. We want the logarithmic scale. You will see that now the distance from 17,000 to 22,000 is the same from 22 to 28 to 36 to 48 and so on and so forth, because we calculated, or this chart calculates it in terms of percentage, which is really important. So in this case, what I'm doing here is I'm trying to see the extension. If this move right? I think this is wrong. Wait. This doesn't make sense. Logarithmic scale. Yeah. So in this case, if prices of Bitcoin moved the exact percentage that it moved from here to here, it would actually be up to here, to 155,000. Do you believe it? Yes, because it's a percentage right now. It's not just a monetary value. If it's only a monetary value, so we'll have to adjust it like this. No, I don't want it to be logarithmic scale. Okay, we are almost there. We are almost 100% of this move. So here we moved like 47,000, and from here to here it's again a 47,000. But do you really see that this move in terms of percentage is the same? It's not, because it's actually not. It's a logarithmic or an arithmetic, calculation. So in this case, we will have to calculate Fibonacci levels based on logarithmic scale. So in this case, yeah, the target for Bitcoin might be 155,000. Does this mean we will just move straight higher into 155,000? No, because on the way higher, we do have some critical resistance levels. So the first one will be the 102, which is the 61.80%. The other one would be the 123,404, which is the 78.60%. And then finally, we will move higher to 100% of the previous move, which is the 155,000. No, I don't want any one of you to ask me when will this happen, because I don't really know. I don't work with cycles or time analysis. I don't care. I really don't care. I just have my targets. It can be reached anytime. So I think, or I hope, I've answered your question. Do you think BTC will extend beyond 100K eventually? Yes, but it doesn't mean it will just be a piece of cake. We will find some resistance around the 102,000. We will find some resistance around the 123 and eventually the 155. I hope I have been clear enough on this point, and I hope that you have learned something new on how to use the logarithmic chart instead of the arithmetic, because believe me, it doesn't make sense. Okay? Please leave me in the comments section if you got this. Oh wait, I'll have to leave it. I will have to leave it. Okay. Do you have any other questions before I conclude this session today? Sianda says, to my side, it's all clear, Chief. Yeah, that's a good one. Thank you. Great analysis as usual. Thank you, Hassan. Yeah, thank you, Fadi. Okay, I think we are done here. I think we have pretty much covered the most important things or sides of the market this week. Hopefully, it will be a calmer week than the previous one. We can have some shorts, we can have some buys, depending on the technical analysis, because during the previous week, I just told you to buy, right? On gold and safe haven assets. But this week, maybe we will have a little bit of directions on both. Thank you for sharing your insights. Thank you. Thank you, Sam. Thank you, Mr. Ray. Says thank you a lot for your technical analysis session today. Yeah, thank you. That's an honor of mine. I really enjoyed this one, and I'll see you guys next week on, or basically it will be next month. It will be the 2nd of December. And I hope that this week will be a successful trading week of yours. Please make sure, I'm sorry, I have a question. No, it's not a question. Someone says, thank you from CTU Porwanto. Thank you. You guys have an amazing week. You please stick to your stop loss during this trading week, especially this one, because yeah, things can escalate real quickly. Have a good day, have a good week, stay safe and trade safe. Goodbye.